Let's go take a look at some of your comments and questions on my videos from around the internet. I'm going to give you an answer on them, whether you wanted it or not. I always wonder with these internet tax plans if it's not just more efficient to do literally any other strategy. Rarely is a tax strategy meant to be efficient. They're generally meant to be effective in saving you taxes. Sometimes, in order to be truly effective, it will require less efficiency on your part. I guess it's not going to be that easy to do in terms of your time and actual documentation on it, but it will result in the best ROI on your time. So don't look at it in the vein of efficiency. Look at it in the vein of effectiveness. Dear Lord, you're boring. Joke's on you. You followed me. I'm a CPA. This is a tax page, and I make no bones about the fact that this is what I'm going to talk about. So, thanks. I assume you can't really hire a toddler to do too much. What age can you actually hire your kids to work that the IRS won't audit you? You're technically allowed to hire your minor child from any age. They could be 1 day old, and you could hire them in your business as long as you have work for them to do. Yes, it is much harder to justify the actual wage if it's very high that you're paying them when they're 0 years old. Now that said, let's say you have a clothing brand and you sell babies' clothes, infants' clothes, children's clothes, and you need models. Well, hey, what's the easiest model that you can get? Your child. And children models can be rather pricey. So you could justify it. The more activity you have for such small children will help in your defense of paying them. So it's not completely illegitimate to hire a very small child or a very young child. But it is harder to justify. You need to make sure you actually have that business purpose. Harder for a construction company to justify that rather than a t-shirt company. We bought used heavy equipment, tractor and roller, about $50,000 first year business. Less than $5,000 sole prop. Can we take bonus depreciation to offset W-2 income of $100,000? A lot of words being said here. I'm kind of confused about it, but here's what my guess is being asked. First year business made a little less than $5,000 in revenue, and they had purchased about $50,000 in equipment. Let's say this equipment is eligible for full expensing with bonus depreciation, right? It's 5-year maker's life equipment. So while I can't make specific advice for your business, Christina, because I'm not your accountant and I don't know all the other factors underlying this question, that said, generally speaking, yes, with bonus depreciation, you can create a loss in excess of the income that you have. Unlike Section 179, which is limited to your profit, right? So with Section 179, it'd be limited to the $5,000 of revenue that was earned. Whereas with bonus, I can create a loss. From 2018 through 2022, you have 100% potential bonus depreciation. So let's say that the $50,000 could all be depreciated in that first year, and you have $5,000 in income. That means you're going to have a $45,000 loss. $5,000 less $50,000 is negative $45,000. That negative $45,000 goes against the other income that you have on your tax return. So yes, it would reduce W-2 income that you have earned. Of course, that is how things translate on a tax return. Tax tip of the day. The sale of crypto assets is not subject to the wash sale rule. What I mean by that is, when you sell securities, like a piece of stock that you have purchased on the exchange, and it's for a loss, let's say it's for a $1,000 loss, and then you buy that back the next day, right? You sold it to create the loss, and then you buy it back to reestablish your basis in that asset the next day. That is a wash sale. You cannot take that loss. It's going to be just re-added back into the basis. So you won't be able to take that loss that year. Crypto does not have that rule. I can sell a piece of crypto one day, buy it back the next day, and reestablish that basis while also taking that loss. What this can help you do is offset a lot of the capital gains you might have elsewhere. Let's say you sold a bunch of securities for a gain. You need the money, you sold them, and you have a $50,000 gain. Well, with the way crypto has been going, I'm sure you have a ton of losses that have been unrealized to this point. So if you want to, before the year ends, just sell a bunch of those losses that you have so you can realize the loss and buy them right back if you still want the crypto in your portfolio, and you just reestablish at that lower basis. So you're able to capture that loss to offset the capital gains that you had, and you'll still have that crypto at that really bad value. I mean, at that value that you have it. Because to date, they still do not have a wash sale rule for crypto assets because they don't want to label them as securities, and thus they are not subject to the same rules or all the same rules as securities. So if you can, take advantage. That is tax loss harvesting in its simplest form that I could possibly do for you. Thanks so much for watching. Be sure to like, subscribe, comment, and hit that notification bell. If you have any questions, definitely be sure to let me know. And follow me on TikTok and Instagram if you're on those platforms as well, where I will respond to things in more short form and also answer questions that may not be answered here. Thanks again for watching, and I'll see you in the next video.